Welcome back to the Deep Dive. Today we're plunging into the, well, let's call them the wild and often unpredictable currents of the global markets. If you've been feeling like there's just a lot swirling around, escalating trade disputes, hitting headlines, the Fed playing a high-stakes game, you're absolutely in the right place. Our mission today is to cut through all that noise, pull out the most important nuggets, the insights, and give you a real shortcut to being well-informed, maybe with a few surprising facts along the way.
That's precisely it. We've taken, a big stack of sources, everything from top financial news outlets, economic reports, our own notes, really trying to help you understand the powerful forces at play today. It's a fascinating look at how international policy, corporate strategy, even our daily consumer habits are all sort of weaving together right now.
All right, let's dive in then. The biggest headline, the storm front, it seems, is President Trump's ongoing tariff offensive. It really does feel like high-stakes economic chess, doesn't it? The moves are coming fast. So what's the latest? What are the details on these new duties?
We are seeing some incredibly aggressive moves. President Trump announced a new 35% tariff on Canadian imports. That's effective August 1st. He cited, Canada's previous retaliatory tariffs, even issues like fentanyl as reasons.
Okay.
Beyond that, he's also floated imposing blanket tariffs of maybe 15% to 20% on most trade partners. That's higher than the 10% currently in effect. So quite a jump.
Right.
And here's where it gets really interesting. There's a 50% tariff confirmed for Brazil.
50%.
Yeah.
Wow.
And the stated reason, this was in a letter to President Lula, wasn't about trade imbalances, which you might expect. No, it cited the witch hunt trial against former President Jair Bolsonaro.
Really? So politics directly driving trade policy like that?
Exactly.
Yeah.
It shows how intensely geopolitical motivations are now shaping trade.
Hmm.
It adds this whole unpredictable new layer to, analyzing the markets. And it's not just Canada and Brazil. There's also a 50% tariff confirmed for copper imports, also starting August 1st.
Copper, too. That sounds significant.
It is, because it's set to include semi-finished copper products. We're talking materials vital for everything, or power grids, military applications, data centers. And looking across the board, President Trump has set tariff rates ranging from 20% to 40% on over 20 trade partners just this week. So that impacts nations like Vietnam, the Philippines, and Asia.
Right.
Then you've got Moldova in Europe, Algeria, Iraq, Libya, Sri Lanka. It's pretty widespread.
So Vietnam's facing 20%.
Yeah, Vietnam, 20%. Some of those African and Middle Eastern partners are seeing rates as high as 30%.
Okay, so we've outlined these pretty aggressive moves, but let's bring it down to earth. For you, the listener, what does this actually feel like? What's the real-world impact? Are companies, and maybe more importantly, our wallets, actually feeling the pinch?
Oh, definitely. We're already seeing very tangible effects. Take Conagra Brands, for example. They make Hunt's ketchup, things like that.
Right.
They recently forecast their annual profit below expectations, and they attributed a 7% overall rise in their cost of goods sold to various factors, but including a 3% hit specifically from tariffs.
Okay, so a direct link there.
Yes. And Hasbro, the toy giant, they're warning that toy prices will likely rise later this year, particularly August to October. They're pointing to tariffs of 30% on China and 20% on Vietnam. Those are their main international suppliers.
Oof. Right before the holiday season, too. Sounds like a direct hit for consumers. But is everyone getting hit equally? Are some companies finding ways to adapt?
That's a really important distinction. Not all companies are facing the same headwinds. Levi's shares, for instance, actually rose after they lifted their annual forecasts.
Oh, interesting. How?
Well, they're betting on strong demand for denim, sure, but crucially, they're also leveraging a diverse supply chain. They use places like Bangladesh and Cambodia that helps them manage this tariff uncertainty.
So flexibility is key.
It really highlights the value of supply chain flexibility, yeah. But this also brings up another important question, kind of a worrying one, that goes beyond just the direct tariff costs. Price gouging. Are companies using the situation as cover? Senator Elizabeth Warren and 15 other Democratic lawmakers are pushing the FTC to investigate. They're asking if some large companies are using what they call President Trump's chaotic tariff strategy as an excuse to raise prices, even on goods totally unaffected by tariffs.
Is there any evidence of that?
Well, there was a recent New York Fed survey. It found that, yes, companies are passing on actual tariff costs, but also a significant share of businesses also reported raising the selling prices of their goods and services unaffected by tariffs.
So it's not just the tariff cost itself, but maybe using the confusion.
Exactly. It suggests this potentially more insidious trend where companies might be using this chaotic environment as cover for just broader price hikes, turning tariff talk into a universal excuse.
That's concerning.
And if we connect this to the bigger picture, the Yale Budget Lab, they estimate that at current levels, these tariffs could push inflation up about 1.7 percentage points higher,
Wow. What does that mean for an average family?
potentially costing the typical American family about $2,300 per year.
Wow. Okay. That's a significant figure. So, given these aggressive opening moves on the economic chessboard, how are other players reacting, other countries? Are they pushing back?
Oh, the reactions are definitely varied and quite strong in some cases. Brazil's President Lula, for example, he came out fighting, insisting Brazil can survive without U.S. trade. They'll look for other partners. He called the tariff unsustainable.
Standing firm.
Yeah, and interestingly, some reports suggest his resistance to Trump might actually give Lula a surprise boost for his 2026 re-election bid.
Politics works in strange ways. What about Europe?
In Europe, German exporters, represented by the BGA trade lobby, they've stated they won't settle for any price in a trade deal with the U.S. They're emphasizing the need for a fair deal for all of Europe.
Right, holding the line for the bloc.
Yep.
And what about that copper tariff you mentioned? That seemed critical. How are suppliers like Mexico and Chile reacting?
Yeah, for copper specifically, Mexico and Chile, who are major suppliers to the U.S., they've basically indicated they could just redirect their exports. Send it to other markets like China, perhaps.
So they have options.
It seems so. Global copper traders are already reportedly shifting away from the U.S., offering cargoes to Chinese buyers instead. But then on the flip side, there's a Chilean copper miner, Antofagasta. They actually see an opportunity here for a U.S. project they had stalled.
How so?
Well, these new 50% import tariffs on copper could potentially make domestic U.S. production suddenly look a lot more competitive.
Okay. An unexpected consequence. So lots of global pushback and maneuvering. But what about trade deals? Weren't those supposed to be happening alongside all this? What's the status?
That's an excellent point. President Trump did state he'd completed trade deals with 200 countries after his first 100 days.
200. Really?
Well, that was the statement.
Right.
But the sources we're looking at indicate only 3 agreements have actually been announced so far. There's a trade truce and framework with China, and then deals with the UK and Vietnam.
Okay, so 3, not 200. That's quite a gap.
It is. However, there is progress noted with the European Union. They seem to be nearing a framework agreement that could set maybe a 10% universal tariff and parameters for future talks. So some movement, but yeah, certainly not on the scale previously touted.
Okay. With such huge shifts in trade policy, you might expect markets to be just tanking. But what's actually happening? How are the markets doing today amidst all this?
Well, it's definitely a mixed bag, especially looking at Asia-Pacific today. Japan's Nikkei slipped a bit. Topix was up slightly. South Korea's Kospi down, but their small-cap Kosdaq was higher. Australia slid a bit. Mainland China's CSI 300 rose.
They're kind of all over the place. Any bright spots?
Yeah, Singapore equities, interestingly, they climbed to a fresh record for the 5th straight day. Hong Kong also opened higher. It highlights how certain regions or sectors are finding strength even with the broader uncertainty. UOB analysts, for instance, they express some optimism about China, citing valuations, stimulus prospects, AI potential, though they did note caution, weak real estate and maybe a policy vacuum, while these trade negotiations are ongoing.
Okay, and what about here on our home turfs? U.S. markets. Are they catching a break or feeling the heat?
Yesterday was actually a strong day for U.S. markets. The S&P 500 notched a new all-time closing high, rose brilliant to 7%.
Another record, okay.
And the Nasdaq Composite also closed at a record high second day in a row, gained 0.09%. The Dow added 0.43%.
So strong performance yesterday.
Strong yesterday, yeah. But U.S. equity futures opened flat Thursday evening, so maybe suggesting a bit more of a cautious mood heading into today.
Right. Now, beyond traditional stocks, there's another market that always seems to be making headlines, especially when things get volatile. Crypto. What's Bitcoin been up to?
Bitcoin absolutely surged, climbed to a new all-time high, $113,863.31 on Thursday.
Wow.
Yeah, building on the record it hit just the day before. Now, a big part of this surge was fueled by, get this, over $318 million in short liquidations across centralized exchanges in just 24 hours.
300 million in shorts getting liquidated. Explain that a bit.
Right, so basically a massive amount of forced buying happened. People who bet against Bitcoin rising were forced to buy it back as the price went up, liquidating their positions. That creates this powerful upward spiral.
Got it. A short squeeze.
Exactly. Altcoins have also joined the rally, and Bitcoin's been trading above $100,000 for more than 60 consecutive days now. Interestingly, public companies actually outpaced Bitcoin ETF inflows in the second quarter.
Huh. So institutional interest still growing there too. Very interesting dynamic, especially with all the other market volatility. Okay, finally, let's shift focus to the Federal Reserve. There's been, well, a lot of talk, maybe putting it mildly, a lot of pressure on Chairman Powell. What's the latest there?
The pressure on Fed Chairman Jerome Powell is definitely escalating. The White House Budget Director, Russell Vought, openly criticized Powell, accused him of grossly mismanaging the Fed, and he also attacked what he called an ostentatious overhaul of the Fed's headquarters in D.C.
An overhaul. What are the details there?
Vought cited cost overruns of over $700 million, and he pointed to things like rooftop terrace gardens, VIP private dining rooms, marble.
Wow. Rooftop gardens and VIP dining while managing inflation.
Exactly. Details that critics argue highlight, a disconnect from the Fed's public mandate and sound financial stewardship. Vought even suggested Powell misled Congress about the renovations.
That's quite the accusation. Over $700 million in overruns. And details like that, it really makes you wonder about the optics, doesn't it? Especially when the Fed's role is managing the economy.
Indeed. The optics are certainly being scrutinized, and on top of that, President Trump has repeatedly called for Powell to resign immediately. He stated the Fed should rapidly lower rates, claiming no inflation, and that rates should reflect the country's economic strength.
So intense pressure, direct calls for resignation, who might be next in line. Is there talk about replacements?
Oh yeah, the search, or at least the speculation, is getting louder. Kevin Hassett, the National Economic Council director, he's reportedly a serious contender, apparently discussed the job with President Trump multiple times.
Okay. Hassett? Anyone else?
Other names in the mix include Treasury Secretary Scott Bessent and former Fed Governor Kevin Warsh. Both of them have been publicly critical of the central bank in the past.
Right. So potential candidates who might be more aligned with the administration's view on rates.
Potentially. There's even discussion about a scenario where Hassett could first fill a new 14-year Fed board seat that opens in January 2025, and then maybe be appointed chair when Powell's term ends next May.
Interesting pathway.
Yeah, and there's even a historical precedent floated for the Treasury Secretary, Scott Bessent in this case, to preside over Fed board meetings. So various scenarios being considered.
So what an incredibly dynamic day, or rather period, it has been in the markets. We've seen these really aggressive new tariffs creating global ripples, hitting consumer wallets.
Yeah, definitely feeling that.
Then you have record highs in the U.S. stock market, despite mixed performance elsewhere. And this intense political pressure mounting on the Fed. It's just a powerful reminder, isn't it? How interconnected everything is. How quickly these policy decisions can translate into real-world impacts for everyone, including you listening.
Absolutely. Understanding these threads, from the nuances of these politically charged trade negotiations to the debates happening within central banks, it's crucial for making sense of the broader economic landscape you operate in every single day. This isn't just abstract policy floating around. It's about understanding the forces directly influencing your household budget, your investment portfolio. It all connects.
So as you reflect on this deep dive, here's something to chew on. In a market that seems increasingly shaped by these big geopolitical moves, these shifting political landscapes, how do you see the balance of power evolving between traditional economic indicators on one side and these, well, unexpected political decisions on the other? And maybe more importantly, what does that mean for your own long-term strategies? That's it for today's deep dive. We hope this exploration gives you some new insights to think about. Until next time.